Hey, what's up, my friend? So, in today's episode, right, I want to share with you on why, you should trade different trading strategies, or rather, why should you adopt multiple trading strategies. Now, don't get me wrong, right? I'm not asking you to system hop. I'm not asking you to, trade everything and anything. I'm not asking you to, try everything out there like it's a buffet. No. Before we even get to that point, right, you first and foremost must master a trading methodology. You must have like a bread and butter trading strategy, right? Something that you have already found success with. And once you have found success with it, right, and then if you want to level up to the next stage of your trading career, then that's where you might want to consider trading multiple trading strategies. Why is that? And the reason is quite simple actually, is because different trading strategies, they excel in different market conditions. Take for example trend following. When does it make money? When the market is trending, right? So that is the power of trend following. It makes money during strong trending markets. Now, what about say mean reversion trading? When does this type of strategy make money? Well, when the markets are wild, when you have swings up and down, those are good market conditions for mean reversion trading strategies. And you see my point, right? Different trading strategies, they excel in different market environment. And here's the thing, the markets out there, it's always changing, right? It goes from a period of low volatility to high volatility, uptrend to downtrend, etc. So this is why you want to adopt multiple trading strategies. There are numerous benefits to it, right? And let me explain to you what they are. Number one, first and foremost, you get to reduce your drawdown. So let's say, for example, you are trading just one trading system, and based on your historical testing or based on your own trading experience, the maximum drawdown is, let's say, a 40% maximum drawdown. Okay, but if you, let's say, now trade two different trading strategies and they are uncorrelated with one another. Let's say the first strategy, the original one, is in a drawdown. Let's say it's in a 30% drawdown. The second strategy might not be in a drawdown because it's uncorrelated to the first strategy, right? That strategy might be up, let's say, 30%, for example. So one strategy is down 30%, the other one is up 30%. And if you combine the two of them, right, let's say you allocate a 50% of your capital to each of these two strategies, the overall drawdown of your portfolio, right, meaning that your capital, when you trade both trading strategies, your overall drawdown is actually 0% because one is down 30%, the other strategy is up 30%. Overall, you net it, it's 0%. So you're pretty much at break even. So this is what I mean by you get to reduce your overall drawdown because of trading multiple trading strategies. Benefit number two is that your returns, right, are less lumpy. What do I mean by lumpy? So if you trade one strategy only, let's say it's a trend following strategy, and markets goes into a nice strong trend, your returns can go like spike up pretty quickly. But when market stops trending, you can see that the returns collapse down equally fast as well. That's normal, right? Because the market conditions has changed. So your returns, in a way, it's quite lumpy. It spikes up, down, very lumpy, very volatile to say. But when you again trade multiple trading strategies which are uncorrelated with one another, your returns, right, it gets much more smoother. So instead of going zigzag up down, it goes like much smoother. The spikes, right, the up and down spikes are less pronounced. So in a way, your portfolio value is growing at a much more steadier pace. Alright, so that's what I mean by your returns will be less lumpy. And another benefit is number three, diversification. Because here's the thing, right? No matter how good a trading strategy or system that you're trading, you just have no idea, when that strategy will break down or when it will enter a drawdown. So if you take, for example, Warren Buffett, as of right now, I check, he has about holdings of about 50 stocks out there, right? He's diversifying his capital, his portfolio into these 50 different stocks, right? No matter how good he is as a value investor, all right, no matter how much he scrutinizes the balance sheet, the cash flow, right, he still diversifies his stock holdings because he is never too sure, right, if that one stock that he buys, right, might just collapse or go bankrupt because of certain reasons that he can't foresee. And it's the same for trading, right? When you trade multiple trading systems, you get to diversify, right, your money across these different systems. But some might not do well, some might do well, some system might go bonkers, but hey, might have some that do very well, so that kind of smooth out your overall returns, smooth out your overall equity curve as well. Does it make sense? So just a quick tip to share with you how you can actually go about discovering new trading strategies or systems. Again, the best way, in my opinion at least, is to actually read books, study webinars from traders that have a proven track record. So I like to study traders that like to share their ideas their systems, right? And they actually provide the backtest results that come along with it. Because the hard work is kind of like, done for me. All I need to do is just take the system that they have shared, tweak it to my own preference, right? And do the backtesting and see how the results have fared, whether it's similar to what they have shared or not. So go and study books out there. There's a lot of books, right? If you want to learn more about trend following, you can study Stocks on the Move by Andreas Kleiner. You can study Following the Trend. You can study another one, Trend Following by Michael Covell. If you want to learn about mean reversion trading, I think there's one by Howard B. Bendy, Larry and Cesar Alvarez. They have books on mean reversion trading as well. So a lot of stuff out there, right? It's all depending on you, how much you want to, absorb, right? The stuff is out there. It's all dependent on you, on how much you really want to take it in. All right, so with that said, let's do a quick recap, right? Number one, the reason why you want to trade multiple trading strategies is because of a few reasons, right? Number one, it reduces your overall drawdown, your overall maximum drawdown. Number two, your returns will be less lumpy. Your overall returns becomes much more smoother. And finally, number three, you get the benefit of a diversification, because at any one point in time, you never know who might do well and who might, not do as well. So that's a kind of a form of diversification for you. So with that said, I have come to the end of today's episode, and I will talk to you soon.